Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. War summit. Presidents Trump and Putin set to meet in the coming weeks in Budapest to discuss ending the war in Ukraine. Ukraine's Volodymyr Zelenskiy will meet the U.S. president today at the White House. Growing concern in the U.S. credit market weighs on Wall Street as two regional lenders disclose loan fraud losses. And charging ahead, Chinese EV-maker BYD is ramping up its global expansion, targeting South Africa for growth. Well, it has just gone 8 a.m. across the Emirates. I'm Eugenia Victorino in Dubai. This has been the longest week. It feels like a much longer week than 5 days. And every day there's been a new theme for the market. Today's theme is fears around U.S. regional banks. It's taking us all the way back to Silicon Valley Bank. Remember that? Back in 2023, fears around the regional banks and whether that would lead to systemic contagion. Well, yesterday you had a couple of, you could call them isolated incidents, but it was enough to spook the market. You saw Wall Street pull back some of the recent gains of the last few days, so ending in the red. Today, S&P futures also leaning towards negative as well. The handover from Asia Pacific, pretty negative session too. A lot of red on the screen when you think about some of those Asia Pacific bourses. The MSCI Asia Pacific index down 0.7%. So there is a day of risk off. Perhaps people are squaring up positions before what could be quite a headline-heavy weekend in terms of the trade war, in terms of geopolitical considerations, the conversation that's going to take place today between Trump and Zelenskiy in anticipation of that meeting potentially between Trump and Putin in a couple of weeks' time. So there's a lot going on, but one thing continues to shine. Guess what that is? Gold, $4,367 is where we're at. Another all-time record high, up 0.9%. Gold is up 65% this year. Over the course of this week, up 8.4%. The biggest weekly advance for gold since 2020. It just keeps glittering. We're going to talk more about that on the show. And then, Brent, take a look at where we are. We're back down to 60. Might break through 60 over the course of the next couple of days if this price action continues. But it's been a very, very heavy week for the energy complex. Brent alone is down 3% this week as the market seems to be focusing on the oversupply outlook as we head into the final months of the year and into 2026. So really a heavy week, downward pressure on energy here. Switching over, I talked about regional banks at the top. Let me just showcase for you the performance of the regional bank index relative to the larger banks in the U.S. And you can see quite clearly, this chart is demonstrating that regional banks have indeed been underperforming the broader mega bank picture. We had a bunch of earnings come out this week from the big banks, and they were very resilient, very robust, very positive, perhaps a little cautionary about the outlook. But in general, it has been a very, very strong quarter for the mega banks. But regional banks haven't been receiving as much love, as you can see from this relative value chart. Okay, let's move on and talk about geopolitical story here. U.S. President Donald Trump says he plans to hold a second meeting with Russian President Vladimir Putin within 2 weeks. His comments came after a 2-hour phone call with Putin ahead of his meeting with Ukraine's Volodymyr Zelenskiy. White House Press Secretary Caroline Leavitt said high-level staff talks will kick off next week.
Plans are now being made for the Russian side and our folks, led by Secretary of State Marco Rubio, to meet, and then for President Putin and President Trump to perhaps meet again.
For more, we're now joined by Tony Halpin, who leads our Russian economy and government coverage. Today, President Trump was supposed to be meeting with Zelenskiy, or he is going to be meeting with Zelenskiy. But now, obviously, he's floated another meeting with Putin in a couple of weeks' time in Europe. What do we make of all of this choreography?
Yes, it's very notable that Putin's interventions with Trump always seem to come at moments of maximum risk for Russia in terms of increased U.S. pressure on Russia to bring an end to its war. And all previous examples have shown that pressure then tends to deflate after the contact between Trump and Putin. And we'll get an immediate test of that when Trump meets President Zelenskiy in Washington today. Zelensky is coming to Washington with quite a long shopping list, including weapons, air defense, and notably Tomahawk missiles.
Does that dim the prospects of the U.S. providing Ukraine with those Tomahawk missiles?
Well, this will be a test. I mean, Trump was very clear that Putin was opposed to this. The Kremlin has been making lots of noises that they don't want to see Tomahawks delivered to Ukraine. So now we will know pretty soon whether Trump is willing to comply with that demand.
Tony, was there any actual progress since the Alaska summit, the last time that Trump and Putin met?
Yeah, it's a good question, and that's one of the risks, I think, for Trump coming into Budapest. That it was very notable that Alaska really produced no benefit for the US, no gain in terms of forcing Putin to stop the war, and the perception really was that Putin sort of played Trump and came away with the win of meeting him on US soil. The US can't really afford to go into Budapest and have the same sort of result. They need to have a takeaway that shows that Putin's willing to comply with Trump's demands to end the war.
Yeah, and ultimately we're back to the same discussions that we were having, but, about land concessions and what lands that Ukraine are willing to concede to Russia. But at the same time, has Russia made further gains on the battlefield?
Yes, Russia's continuing to prosecute its war. It's continuing largely unhindered by US pressure because Trump has always held back from demanding that Putin stop the war while they discuss a possible end to it. And the difficulty for Ukraine is precisely that any discussion on the table about a solution involves concessions by Zelensky, which are very difficult to swallow.
Yeah. Thani, thank you so much for the preview. That was Bloomberg's Thani Halpin, a look ahead to the meeting between President Trump and President Zelensky later today, and then that floated meeting with Putin in a couple of weeks' time. Well, President Trump is warning Hamas that the U.S., quote, will have no choice but to go in if killings continue in Gaza. In his social media post, he says killings violate the ceasefire deal he helped broker with Israel. His remarks appear to open the door to possible direct U.S. military action in Gaza, though he later clarified that American forces would not be involved. Donald Trump's former national security advisor, John Bolton, has been charged with allegedly mishandling classified materials. The U.S. Justice Department says the misconduct spanned from 2018 to 2025 and accuses him of sharing more than 1,000 pages of information about his day-to-day activities on the job. Bolton has since become one of Trump's fiercest critics. His lawyer insists Bolton hasn't broken the law, arguing the charges stem from unclassified personal diaries. And the White House is poised to deliver a major win for automakers, easing tariffs after months of lobbying by Ford and GM. The Commerce Department is expected to announce a 5-year extension of an arrangement that allows car makers to reduce duties on imported parts, a key offset to Trump's record-level auto tariffs. The announcement could come as early as Friday. And loan troubles at 2 U.S. regional banks are reigniting fears in the credit market. Zions Bancorp and Western Alliance say they were hit hard by fraud tied to distressed mortgage funds, sending their shares down more than 10%. The broader bank index also saw its worst drop since April. Garfield Reynolds, who leads MLive coverage in Asia, joins us for more. Garfield, I guess the question we're all asking ourselves this morning is, are these two idiosyncratic, isolated incidents, or do they speak to perhaps of something more systemic lingering under the hood?
Yeah, well, that's very much the question that investors are asking themselves at the moment. Across Asia, which seems a little bit bizarre, there's some commentary that why should Asian shares fall because a couple of regional banks got themselves into a bit of trouble. And it's not even, the thing with SVB, that was kind of an issue that was obviously a broader issue because their problem was what had happened to the value of the treasuries that they were holding as the Fed was raising interest rates. So this is more idiosyncratic, as it were, but there's a couple of things that are going on. One thing is we're kind of towards the other end of the cycle. Back in 2023, the fear was that the Fed's interest rate hikes were breaking things. Now the Fed is in easing mode, and that's because the economy is showing weakness. So that adds to the risks if you do have some sort of a systemic or quasi-systemic breakdown in what's going on in US credit at a time when the economy is already slowing. Things could get very bad very fast. There's also the sort of the drumbeat. Jamie Dimon talked about cockroaches. We had the first brands incident recently. There's a lot of worry about what's been going on with private credit. And there was also the feeling that the grind lower and lower in corporate spreads at a time when you had AI bubble fears and geopolitical tensions causing concerns that US equities were getting overvalued and equities would step down, but credit seemed impregnable. So now we're getting some sign that we might get some cracks there. And honestly, I think people are not just looking back to 2023. They're looking back to what went on in 2007 and then into 2008, where you had a series of warning signs which ended up being, this was what prefigured that we're going to have a major credit crunch. So investors are, fretting a bit about that at the moment. Going into the weekend with all the risks that you were mentioning, some of those earlier, it makes plenty of sense for investors to take some risk off the table.
Yeah, and the other element that perhaps is of note is just how big the size of the private credit market is as well, with lack of transparency about some of those underwriting standards there, because it's not as regulated as well as the public markets, to your point. Let me just ask you, though, about the price action as we head into this weekend. I mean, I thought it was interesting, the handover from Asia Pacific, even there's such a notable decline in some of those bourses there. Is this all on back of U.S. regional bank fears, or people just squaring up ahead of what could be quite a headline-heavy weekend?
No, I think it's more the latter, and especially, it's been a long week. It's been a nasty week. It started nastily with the back and forth about trade tensions between the US and China. In Asia, you've also had the concerns with what on earth is going to happen with the Japanese prime ministership, whether Takaichi will end up becoming prime minister, and what promises she might have to make, to obtain that post. So you've got all of that going on, plus concerns about what might happen with oil, what might happen with Ukraine. It was interesting. We had Trump yesterday talking about how Modi had pledged to reduce Russian oil purchases, and then India coming out just quietly later on saying, we have no recollection of such a conversation. So there are lots of triggers there that could lead to fresh turmoil.
Garfield Reynolds, thank you so much. Thank you also for helping us break down some of the price action today. He leads MLive coverage in Asia. Now, still ahead, we will get the market outlook with SEB as traders weigh concerns over U.S. credit quality and rising tensions between Washington and Beijing. This is Bloomberg. The IMF is urging calm as trade tensions persist between the U.S. and China. Managing Director Kristalina Georgieva says the global economy has held up well against tariff shocks, thanks in part to countries choosing not to retaliate against Washington's levies.
If these recipients of Chinese goods feel the heat and decide that they too should impose tariffs, we may still have the risk of a trade war moving from one place to another. So our message to everybody is be calm, and to China, be careful. Do not provoke other countries to see you as a threat to their economies.
Let's turn to investment strategy amid the market risks. Joining us now is Eugenia Victorino, head of Asia strategy at SEB. Good to have you with us on a day like this. A lot of focus now on the U.S. regional banking situation. How do you read the knock-on effect that could have on broader markets and market sentiments? Obviously, we're trading in the red this morning.
Yeah, so clearly there has been an impact on the Asia investors, but at this point, from what we've seen in the last weekend, it's a little bit risky to keep money on the table on a weekend when a lot of headlines can be coming from Washington or just from Truth Social. So given that strong conviction is lacking in the market, there is really no incentive to keep money on the table and probably just take profit on some of the equity gains that we have seen in the last 4 days.
Do you believe that markets are priced for perfection here, and that any risk like this could set off a cascade of events that actually will lead to a significant pullback? Well,
to be fair, what we have seen from the U.S. Tech companies, there is strong demand for AI-related investments, but that's the issue. It is an investment, whereas the big risk for the AI-related rally is whether these investments would actually bear fruit as far as productivity gains. But at this point, it is enough to keep the sales outlook for TSMC and other Asia tech companies to remain quite bullish even into 2026.
Yeah. What is your view of the U.S.-China discussions? We've seen a heightened risk aversion there. It was only a week ago that Trump put out that post on Truth Social. How do you see this all panning out?
Well, at this point, our view is that both sides are willing to negotiate, but I think we see a little bit more eagerness to negotiate from the U.S. side because we haven't really heard so much from the Chinese policymakers. Having said that, looking at the deadlines or the date of effectivity of the rare earth controls planned by China, they are opening the space for negotiations because as far as they are concerned, most of the policies will take place or will take effect on November 8th and then December 1st. Having said that, from now until November 8th or December 1st, as far as Trump policy is concerned,
Okay, looks like we're having a few technical difficulties with Eugenia, but of course talking through what could be a crucial couple of weeks when it comes to those U.S.-China negotiations. Eugenia, if you just want to finish your points on how you see things evolving.
Yeah, so our expectation is that risk or headlines will be will provide some volatility in the market. But at the end of the day, we are expecting a negotiation to at least delay any of these policies from being enacted.
Yeah. What do you see as the broader impact of these trade tensions between U.S. and China on the region as a whole, on other countries in Asia? Because, I was having this conversation with somebody earlier in the week, and they were saying actually what's happening now is there is some concern with other countries in the region that China has found different markets for their products, and now those countries are importing deflation from China. There are knock-on effects to the region.
It is very clear that Chinese imports into the region has really taken hold, and we are seeing that the exports of China remain very strong because they are gaining market share in markets outside of the U.S. Now, looking at the Asian economies, not every government is in a position to put up restrictions against trade with China, because at the end of the day, China is also a big source of investments, China and Hong Kong for that matter.
Yeah. As we look into the last couple of months of the year, where are you seeing investment opportunities now?
In Singapore, we are definitely quite optimistic on the outlook for the Johor-Singapore Special Economic Zone, but that's more of a structural story. Looking at the more near-term story, we are actually quite bullish on the Aussie dollar, specifically against the Kiwi dollar, simply because the monetary policy is really divergent there.
Okay. Thank you for the call. Eugenia Victorino, Head of Asia Strategy at SEB. And coming up, BYD plans to invest in as many as 300 fast charging stations in South Africa. The Executive Vice President, Stella says Africa is an important market for the company as it ramps up efforts to expand globally. That conversation next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Johanna Versace in Dubai. Chinese automakers are making a bigger push to tap Africa's growing EV market. Stella, Executive Vice President at BYD, says the company is gearing up to roll out up to 300 fast charging stations across South Africa by the end of 2026. She told Bloomberg's Jennifer Zabazaja how this major move fits into BYD's broader expansion plans.
If we don't invest on flash charger, then this will be challenged. Right. Because here, we still is a big country here, and then still EV range and the infrastructure are the two big concerns. So that's the reason the big news for us in here is we're going to officially announce to invest flash charging infrastructure here in South Africa. How much? We're going to put maybe 200 to 300 before end of next year.
How much are you willing to put in, though, for that?
This is big money because each flash charging costs a lot of money. So this is a big investment as our step one.
Let's talk about other expansion plans. You haven't been in the U.S. at this point. Are you talking to the Trump administration at all, potentially, about moving there?
Well, we didn't have plan to into the U.S. market.
What about Europe? Let's talk about your play there. How do you mitigate some of the risks that the regulators are maybe putting on your company to expand?
I think we're doing very well in Europe, and also our facility in Hungary will start operation by end of this year. Then in Q1 next year, we will start to do ramp up to produce our car over there. So BYD already in the position turning ourselves to be local producer over there. So then BYD is doing very well, and then on dealer networking, on after-sales service, and the people just enjoy our car.
There's some reports that potentially Spain could be the next hub in Europe. Can you give any validity to those reports?
I don't really follow that. My big more follow is really satisfy our consumer, our customers needs. And then for a lot of politics, a lot of topic is for us is a short-term play, but the BYD is a long-term player. We need to focus on where original market. If we produce in Europe, we hire 10,000, 20,000 local jobs, then we become European manufacturer. We're part of this party.
That was Stella, Executive Vice President at BYD, speaking to Jennifer Zabazaja. So let's take a look at how equity futures are rounding up at the end of this week. It is risk-off today. You have all of the majors leaning towards negative. S&P down 0.4. So take a look at European markets, also down 0.8%. A very risk-averse session today as you speak to the handover from Asia-Pacific as well. And obviously still very strong performance in gold. We're going to be talking about that soon. Gold and silver hit record highs once again. The safe haven trade roaring back as credit fears mount and U.S.-China tensions escalate. We'll discuss what's fueling the frenzy with Ewa Manthey from ING. That's next. This is Bloomberg. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. War summit. Presidents Trump and Putin set to meet in the coming weeks in Budapest to discuss ending the war in Ukraine. Ukraine's Volodymyr Zelenskiy will meet the U.S. president today at the White House. Growing concern in the U.S. credit market weighs on Wall Street as two regional lenders disclose loan fraud losses. And gold and silver rise to records as those credit fears and heightened U.S.-China trade tensions strengthen demand for havens. It's just gone 8:30 a.m. across the Emirates. I'm Johanna Versace in Dubai. Well, there's one word that people have been talking about all of this week, and that is the word cockroach. Why? Because of a comment that Jamie Dimon made on the day of JP Morgan earnings, saying that there's never usually just one cockroach. And typically, if there's one credit fear that's beginning to emerge, there are likely going to be others as well. And that is exactly what we've seen in the last 24 hours with some concerns around some of those regional banks, their exposures, some fraud losses that at one of the banks as well. And so on the back of that, we have seen those regional banks slide even further. Yesterday, that index was down 6%, pulling down the broader index as a whole. And what we've seen is Wall Street closing in the red yesterday. Today, also leaning towards negative. S&P futures down 0.5%. The handover from Asia Pacific also not so positive as well, down 0.8%. So very risk-averse session, which means that more money has been going into gold. Gold up 0.8%. We are up 8% this week alone, up 65% for the year. Just massive inflows going into gold and silver. We're going to speak about that with our next guest in just a moment. And then take a look at Brent. We're at $61 now, down from, we were only at 70 a couple of weeks back. So we've really come a long way since then. The complex is down 3% this week alone as the market is focusing on the oversupply outlook as we head into 2026. And also what all of these latest tit-for-tats between U.S. and China could mean for global demand as well. So Brent trading on the back foot this morning at $61. Furthermore, I just want to point your attention to this relative value between what's been happening with U.S. regional banks versus the broader banks. And you can see the trend over the last couple of years is for underperformance. So regional banks have been sliding relative to the performance of some of the bigger banks, and many of them did report this week. And their earnings were very strong. I mean, we spoke about JP Morgan, Jamie Dimon, referring to potential credit risks out there. But broadly speaking, it has been an absolutely gangbusters week and quarter for these banks, both on deal making, advisory, and on trading as well. Will that continue as we head into the last 2 months of the year? Well, that's a big question. And yesterday there was some concern coming through those banking stocks. Well, the safe haven trade has been in full swing this year. Gold and silver have both hit record highs as fears over credit quality in the U.S. economy and heightened frictions between Washington and Beijing boost demand. Bullion is on track for its biggest weekly advance since 2020, extending a breakneck rally that began in August. And silver has shattered its previous all-time high set back in 1980, underscoring the surge in demand for precious metals. For more, we're joined by Ewa Manthey, a commodities strategist at ING. Ewa, so good to have you on the show today. There's so much to talk about. Maybe let's just start with the precious metals and then we'll transition to the base metals. Gold is literally moving vertically. I mean, the past couple of weeks have seen a record amount of inflows from ETF. We talk about central bank buying, but I've noted that we're already through many of the year-end targets that analysts, yourselves and others had set for the year. Is it possible that this rally can continue?
Good morning. Really, gold seems unstoppable right now, and that rally is showing no signs of slowing. So yes, there are the growing concerns around Fed's independence, political uncertainty, trade tariffs that will continue to keep strategic investment interest strong for gold. Also, the U.S. government shutdown dragging on has helped. And recently, gold has been boosted by an escalation of the U.S.-China frictions, and also that the Fed will cut interest rates twice more this year.
Yeah, I mean, do you see any downside risks to gold at this point? What could take the wind out of its sails?
So what could go wrong for gold? Really, if we see world peace. Or if we see a major market sell-off, this could force investors to dump gold to raise cash. Also, if prices stay too high for too long, we could see physical demand weakening as well and leading to demand destruction on that point.
Yeah, well, world peace is a tall order at this point, even though President Trump will probably take credit for it. And how do you see gold's cousin, so to speak, silver, and the squeeze that's going on there? Is this, again, a technical backdrop, or do you think as well there that there are fundamental reasons for silver to be rallying as well?
Well, gold is often called gold on, silver is often called gold on steroids. Because its price just tends to swing more sharply than of gold when we see market stress. And for silver, it's both an industrial metal and a safe haven. So that rally has been driven both by appetite from investors who see silver more as a proxy for gold, But we have also seen demand from industries, including electronic and solar panels. Also, the market is tight, as you said, because we've seen years of low supply, and that combined with growing demand from industrial sector and also investors has led to a supply shortage for silver.
Yeah, I mean, it's just been a massive year for metals. So those are precious metals, but industrial metals, base metals also performing really well. Copper, aluminium, a lot of the metals that have been subject to those Trump administration tariffs. To what extent do you think it is tariffs driving the price action in some of those industrial metals now?
So really the dynamic in industrial metals has shifted this year, especially more from China to the US, and tariffs have been this massive force that have shaped industrial metals prices and supply and trade flows this year. So, like for example, for copper, it's been the outperformer in the base metals complex this year, and it's been both driven by macro tailwinds, but also by supply disruptions with the recent accelerations we've seen. Driven by longer disruption at Grasberg, for example.
Ewa, do you have a house view on the weaponization of rare earths and what China has announced in the last couple of weeks? Obviously, this has become a mainstream topic, and I wonder whether you see any knock-on effects to the commodities that you cover on back of these latest potential export restrictions.
Sorry, it's not something that we covered.
Okay, fair enough. So then let's just bring it back to what we were saying about some of the broader industrial metals and whether you think actually, there are other factors that play on the fundamental side of things. In copper, we speak to the huge demand that's necessary for the transition, for the build out of data centers. Do you expect that to be a big tailwind in the coming years?
Yeah, definitely. Copper has been driven by electrification, and really copper is the metal of energy transition. But it is something that we see playing out later on. It's not something for next year necessarily, because it's going to be transition. It's not going to be a quick switch, right? And we think that China demand remains really an area to watch for copper. And that's what we're gonna be watching for industrial metals as a whole.
Yeah. Okay, so interesting. Ewa Manthey, really good to have you on the show today. Metals, obviously very topical, commodity strategist at ING. Now, Israel's central bank chief says policymakers will move cautiously on rate cuts as uncertainty over the U.S.-brokered ceasefire deal with Hamas persists. Governor Amir Yaron spoke to Bloomberg's Lisa Abramovich on Thursday at the IMF's annual meeting in Washington.
Israel entered very well the 7th of October. The 7th of October did negatively impact Israel in a significant way, but the Israeli economy throughout these 2 years have shown remarkable resiliency. Now we're seeing that if this agreement, we hope it proves sustainable, that will bring sort of a lasting calmness and stability. And those are conditions that are definitely can unlock a lot of growth, rapid recovery, both for Israel and maybe for the region at large.
There's a lot of debt that has been incurred during this whole endeavor. There's also inflation that's actually come in less than expected, which has opened the door maybe to the possibility that maybe you could cut rates even before the November meeting. Is that a possibility?
The first thing to say about inflation, our monetary policy has actually proved itself in the sense that in spite of the wars are usually inflationary. Inflation has converged into our target between 1% and 3%, all throughout maintaining financial stability, which of course is very important. This was an encouraging CPI that came in. Right now we're at 2.5%. But there are two fundamental forces that are working now with the cessation of the fighting. On the one hand, they're short of labor supply that has been there all the time. We're going to see probably some release of reserve people, and that's going to help reduce inflation. We've seen the shekel appreciate throughout time, and in particular in the last, due to the cessation of the ceasefire. Then those are basically putting downward pressure on inflation. On the other hand, the optimism is potentially bringing a boost to demand. And so with these two offsetting forces, we want to see clarity a little bit on the forces that indeed inflation is converging more firmly, and we have some encouragement by the CPI, but we want to see this continues to go. And we are, because of the uncertainty, even about the agreements and everything, when we move, we still have to move very cautiously.
Bank of Israel Governor Amir Yaron speaking to Bloomberg's Lisa Abramovich at the IMF's annual meeting in Washington, D.C. And coming up, in South Sudan, communities near oil fields allege polluted water is causing birth defects and miscarriages. We have the details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. South Sudan relies on oil for almost all of its revenue, but some communities living near the oil fields allege that polluted water is causing birth defects and miscarriages, raising serious questions about health and accountability.
It's hard to overstate how important oil is to South Sudan. Roughly 90% of the country's revenues come from oil. In 1997, a consortium of oil companies from around the world came together and began exploration in the area. In 2006, major production began. The consortium was led by the Malaysian petro giant Petronas. Produced water is a toxic brew of heavy metals, hydrocarbons, drilling fluids, and salt brought up alongside every barrel of oil. Best practice in the industry is to dispose of it by injecting it deep underground. The concern here, though, is that produced water has been put into ground-level pits and then seeped into the drinking water supply.
Well, that was the hidden cost of Sudan's oil boom, which you can watch on Bloomberg TV and online. And from Monday, it is available on YouTube. So joining me now is Bloomberg's Simon Marks, who worked on the documentary and wrote about it. We just played a snippet of it. Very, very powerful, impactful. But you talk about, the fact that Malaysia's Petronas was warned in 2011 that its oil wells in South Sudan may actually be causing congenital disease.
Right. Hi, Jumana. Yes, exactly. Oil in this area was originally started to be produced in 2006. And in the subsequent years, the local community slowly began to notice animals dying. I think it started with herders, their cows, their calves began falling sick. And progressively, humans also began to experience different forms of disease, including congenital disease. And today, if you go to Unity State, it doesn't take long until you can find parents, mothers who have been impacted by birth defects, their babies passing away in many cases because of this. And there are some children that have survived, with more minor defects. We found some children with extra fingers. In another case, there was a child born with no eyes even. And really, it's a very remote part of South Sudan. There's very little scientific research into what's causing this. But if you speak to aid workers, the local communities, they say that there's only been a spike in such cases after oil started being produced.
And Petronas has a 40% stake in the consortium. Have they been held to account by authorities? What has been their response?
Yeah, so Petronas has been very active in this area, known as Koch County, for many, many years. They did abandon their assets last year, and so have since left the country. But in terms of accountability, there's not been very much, and the local community often complains. Sometimes they hold demonstrations locally. Local politicians in the country inside the parliament have raised this as a major concern, and they've pushed for an audit of the area, but both in terms of environmental impact and social human impact. But those audits, even though they were quietly carried out, the results have never been released. And so the community is essentially in the dark. Petronas does say it's carried out various corporate social responsibility programs in terms of health centers, education, etc. But when you're there on the ground, you really feel that any such services have fallen into disrepair. We found a health center that the oil consortium led by Petronas had invested in, but it was simply not functioning when we visited.
So a remarkable piece of reporting. Simon Marks, thank you for bringing us that weekly documentary. Now, coming up, the UAE Minister of Foreign Trade says extreme reactions from countries, including China, to U.S. tariffs have escalated the trade war. We'll have more from my panel interview with Dr. Thani Ahmed Zeyoudi from the World Economic Forum in Dubai next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersachi in Dubai. UAE's Minister of Foreign Trade says extreme reactions from countries, including China, to U.S. tariffs have escalated the trade war. Speaking at the WEF's annual meeting of the Global Future Councils in Dubai, Dr. Thani Ahmed Zeyoudi told me the reaction was also not anticipated by the Trump administration.
Looking at the tariff and looking at what we have discussed earlier, everyone was expecting that the tariff is going to be very limited to certain countries and certain sectors because the administration in the U.S. wants to fulfill certain objectives by that. But the evolvements and the reactions of different countries is the one which escalated this. The reaction, the extreme reaction by the Chinese, the extreme reaction by other countries, escalated the discussion, escalated the reaction even from the Americans themselves, which was not expected as well by the administration itself. The second one, the extreme acceptance by some countries messed up the whole plan. And it opened up another opportunity for the administration to continue in their demanding, because the minute it happens with Vietnam's and then with some other Asian countries, encourage them to continue with that by saying that the countries are going now to accept our conditions on this. Now, is this going to be the new norm? Absolutely. The 10% will not go down. So we have to live with that.
You don't believe it's going to
I don't think, and even with the discussion with the administration, at least for the upcoming 3 years, we will not see a reduction below the 10%. So that's the new reality, and we have to live with it, and we have to start planning ourselves to ensure that we're overcoming this challenges that's going to face the world. Now, the American businesses, the multinational companies, they have to work around it. The main issue for the businesses is the unpredictability, because this continuous changes that no one can stick to a business plan, no one can have a long-term plan, and they have to keep changing their tactics on almost a weekly or sometimes daily basis. Now, how we're seeing this forward? More partnerships is going to happen, more free trade agreements is going to happen, changes in the mindsets and attitude from countries which we were never thought that they're going to change their mindsets. And I'm going to give you some examples from our experience as a country. We've been reaching out to Mexico for quite some time. They were not reacting to our request to start having an FTA.
Yeah.
We were negotiating with the Canadian governments the protection of investments agreements for years. We just concluded in a month after we opened the
countries into action.
Mercosur were very difficult in negotiation. They're moving much faster. EU now is negotiating with the UAE, and we're moving in very good pace. So it really forced countries and blocs to move the way that they've been historically moving forward. Are we going to have a solution with this partnership? For sure. At the end of the day, the trade is like water stream. You know for sure the water stream is going to find its way. But with this barriers that comes the way, it's going to maneuver around it. But are we going to close our traditional relations and engagements and supply chain? Absolutely no.
That was part of our conversation yesterday at the World Economic Forum here in Dubai. The UAE Minister of Foreign Trade, Thani Ahmed al-Zeyoudi, a gentleman who knows a lot about what's been going on with all these trade flows, and saying that we have to get used to this new world. 10% tariffs are not going anywhere. And he said later on that trade is like water. It will find a way to flow. So those were his comments on the panel. I'm going to leave you with a quick look at markets because things are leaning south. It is risk off. Some concerns about the U.S. regional banks now as we head into the weekend. And, of course, geopolitics in focus as Trump has floated a meeting with Putin in a couple of weeks' time in Budapest. But that is it for Horizons Middle East and Africa. I'm Johanna Bersachi in Dubai. Stay with us for Daybreak Europe.